All right. Hello, everybody. This is a red day, to say the least. To say the least, it's a red day. It's pretty red today. And we're going to talk about how red it is. Live stock market close. Oh, it's red. It's so red. Oh, I tweeted this on the wrong account. Oopsie doopsie. Yeah, so in the market open, I was like, well, it's red. In the market close, it's really red. It's very red. Notifications work today. Awesome. Dave does. What's up? Adam, Damien. I gave up stocks and started buying Pokemon cards on eBay. That probably makes more sense. Tattooed Chef. Where's Tattooed Chef? Let's look at it. So let's open up Webull. It's one of the more red days that I've seen in the past couple of months, to be honest. It's very red. Where do we have it? Where is it? What's the stock we're looking for? Hold on. What's the stock you just mentioned? TTCF. 11 minutes away from market close. TTCF is under $5. Oh man, down 7%. The whole market's getting hit though, Bran. SoFi 5%, Palantir 3%, Enphase not down as much as I want it to be down, but it's down. AMD, this is 13% today. Okay, so AMD was down 5% yesterday off of guidance going down from 6.5 billion to 5.9 billion. They're now down another 13.6%, a cumulative almost 20% down from yesterday. The market is not happy with the reduced guidance for the short term. For the long term, they're probably going to beat guidance because they have lower expectations and they don't have this height of pressure on them. AMD was a stock that was $164 at its height. This was November 2021, and even in the lows, it stayed at 120, 100. I mean, it was pulling up. Obviously, got to the 80s, 90s. Now it's just completely been demolished. I mean, this stock, but nothing with the company has changed at all. The thesis, this stock is at COVID levels at 2020. Which kind of proves the circular the COVID run up was eventually just going to come back down given what's been going on here. So that stock is hit. Miyoko says Jeremy's crying. Yeah, when I asked him about, and in the interview we talked about Chef, I asked him about it and he was just like, it's going to be a long-term thing. It's going to take a while. And I think everyone with every stock ultimately has to agree that it's just going to take a while. Like at the end of the day, it's not going to be that easy to get out of this market. It is red. Dare I open my Webull app? Yeah, I looked at my portfolio today. I mean, it's red. I'm not down as badly because I've been buying the dip at some good prices, to be honest. So it's not horrible. My 5 shares of Tesla are down to 223. I bought it at 240. Probably will average down if Tesla gets to closer to 200. That's when I feel more comfortable averaging down. I don't think today's the best day to average down because tomorrow might be a little bit rough, but we'll see. What is the story behind your MJ Bad City? I love Michael Jackson. I'm a huge Michael Jackson fan. So, they're releasing the Thriller 40th anniversary, and they're releasing 10 new songs that were recorded in the Thriller sessions that were never released. And every Thursday, the MJ estate is like putting out the name of the song, which is really cool. So, I'm just a very big Michael Jackson fan. I can't wait till that album comes out because that's gonna be fun. But that's the story. Palantir has been getting ripped today. Palantir got a bunch of new contracts this week and last week. Market doesn't care. We'll be doing the Palantir weekly at 11 p.m. this Friday. Also, I'm thinking, let me know if you guys are interested of starting SoFi weekly. I have a friend who is also heavily invested into SoFi and has a couple of other friends that are big advocates for the stock. We were thinking of doing a SoFi weekly at 10 o'clock every Friday, and then Palantir weekly at 11 o'clock. So if you guys are interested in that, let me know. We're probably going to do it starting next Friday. We're really excited for it. And I don't think there's the huge SoFi community as much as there's a Palantir community. So it'd be nice to kind of build that up and have another stock that we analyze deeply. DNA, Ginkgo Bioworks 309. Kathy Wood bought another 800,000 shares yesterday of the stock. She bought 250,000 shares the day before yesterday. So she has been loading up quite heavily. I expect her to buy a lot today. Most likely, we'll see. But on a day like this, Kathy's probably buying some of her Kathy's probably buying Tesla today. We're probably gonna see that. S&P at 362 is just at 375 yesterday. So S&P has fallen massively from what we originally saw it at. SoFi Weekly. All right, you guys want it. Very cool. SoFi. So what do you mean tomorrow might be bad? The market is Saturday. That's true. I think I know why Jeremy interview performed better on Audia than the Meet Kevin one. It may have been because the first clip of Jeremy's that you posted on YouTube directed right to Audia. Didn't I do that for Kevin? Oh, you're right. Wait. No. The clip I did with Meet Kevin also directed to YouTube in the description, I think. No, it didn't. You're right. I don't think it did. I think, yeah. I think you're right. Yeah, that's a good argument, Sasky. Yeah, that's probably a mess up on my part. You live in your guys. The Jeremy interview on Audia is crazy. It has 500 listens. We have not had an Audia reach 500 listens. I mean, that's insane. I mean, for a new platform to get 500 people to listen to it, it's pretty odd. His fan base is just amazing. So shout out to Jeremy for letting us do that. Like literally, I woke up in the morning. We had 160 hours of audio streamed in the first 6 hours of the day. Like it was insane. It was absolutely crazy. I'm really curious on your and Chris's debate regarding DNA. Yeah, me and Chris have a lot of content we're making soon, like a lot of content. So we'll be probably talking about DNA soon. On the weekly, we might talk a little bit about. But if you want to see someone shit on DNA, yesterday I did not an interview, a late night stock talks with Vitaly from the Freelance Finance channel. And he basically shitted all over DNA. He didn't shit on it, but he basically said it's speculative, so you shouldn't have a lot of money in there, which I agree. I think if you have $100,000 portfolio, you should probably have 10,000 in something like a DNA, and you hope it 20x's. So 10% max, 5%, which is the same for me. I don't have more than 10% in there. I think I have to check, but I do kind of want to make it a top 3 holding, which would make it more than 10%. So. Still thinking on that. Meta at 133. Oh my gosh, we are at it. I didn't even look at Meta all day. It's getting to the point where I might start buying Meta. I'm sorry. It's getting to the point. Sachin will be here today, by the way. Sachin will be here today on the market or on the Palantir Weekly. The big difference is one of them is live streaming all day versus the other guy is relatively private except his own videos. Who are you talking about? Jay Schwat. Plus, the Jeremy interview isn't available on YouTube yet, so people go to Audia. Yeah, that's probably true. Amit, do you have any defense stocks like Lockheed or Raytheon? No, Palantir is probably my defense stock. But goodness, Meta. Oh my goodness, 132. We hit a 52-week low. I didn't even know we hit the last 52-week low was like 134. It's getting to the point, man. This is stupid. It's trading less than 11 times free cash flow. Market cap is $358 billion. Revenue was $125 billion. Price to sales is 3 on a company that has 3.4 billion DAUs. At this point, I don't care about your political feelings about Meta at all. Like I'm talking straight dirty capitalist numbers. When the markets turn around, does Meta not shoot up like immediately based upon us recognizing, oh shit, look at this company? I mean, I'm not. Me and Vitaly yesterday talked about the metaverse. He made a lot of good arguments, all that stuff. But forget them, just like pure fundamentals of this company. Yes, it has a bad reputation. They got to figure that out. But at some level, I mean, goodness, this is getting dumb. Like it's looking more attractive than Google because Google, you got to remember, is $1 trillion company. Meta is not $1 trillion company. They were $1 trillion at one point. Now they're not $1 trillion company. I was talking about Kevin versus Jeremy and why I would be more excited to see Jeremy. Okay. I got you. Yeah, that makes sense because Kevin posts a lot of videos versus Jeremy. Yeah, that makes a lot of sense. A lot of sense. Good morning from Singapore. Seth Roth, thank you for being here. Today was lame. I made too many small deposits on Robinhood and reached my deposit limit. I have Robinhood Gold, so for $5 a month, I can deposit like $5,000 in a minute if I wanted to. Because I used to not have it, and it'd take me like days to get money. Or like 1,000 at a time or something. And I was like, bro, if I want to buy stocks, I want to buy it immediately. So I just paid the $5 a month for it. The Meet Kevin vid didn't have an obvious link like the Jeremy one did. I was converted by the Jeremy one because there was easy link and you left it at a cliffhanger. Wow. So the most obvious thing I could do, which is leave a cliffhanger, I didn't do on the Meet Kevin interview. Interesting. So interesting. Yeah, that makes sense. I tweeted the Meet Kevin audio link, but I didn't. Let me make sure real quick. Did I on the Meet Kevin one? Did I put the link in there when he talked about Palantir? I don't think I did, man. That might be the reason. Is that the? Oh no, I did. I did put the link. But the problem was there wasn't a cliffhanger. I think that was the big thing. I put the link in there, but it wasn't a cliffhanger. It wasn't a good cliffhanger. So Robinhood Gold worth it. I think it's worth it just because if you use it as a primary brokerage and you want to get your money immediately into your account, sometimes it takes forever. But Robinhood, if you have gold, they'll put it in there in like literally 0.2 seconds. Market's going to close in about 1 minute and 7 seconds. So that's why I think Robinhood's gold. So let's look at Hood stock before the market closes. What do we have? We have $10.76, down 3%. FTX bought a 7% stake in Hood for about $650 million. Kathy Wood still has 20 million shares of the stock. I was bullish on Hood because I use the product, but I like SoFi, but Robinhood's app is far beyond SoFi's investing app. I mean, I think anyone can admit that. Robinhood has the best investing app on the planet. You can hate the company, but the user interface it's just beautiful. It's a beautiful, beautiful product. Now, obviously, Robinhood doesn't have a sort of platform for fintechs like Galileo that like it's a very one-trick pony. It's like they just do payment for order flow and that's it, which is why the stock is not that interesting to me. But that's why I think Robinhood should get bought out. Like Charles Schwab, Fidelity, they should just buy Robinhood and control Gen Z investors. Like it would be so. But the problem is they IPO'd at $38 billion, and Robinhood IPO'd at $38 billion. Or $38 a share, which was it was in the tens of billions of market cap, probably 20. Like it's probably not worth that much. All right, there we go. 4 p.m. on October 7, 2022. The stock market in the United States of America is officially closed. Stock market is closed. Let's look at some of these stocks. Palantir down 0.06% after hours, AMD 58, Twitter 49, Meta 133. Again, Meta is getting very interesting. I didn't buy anything. I bought a little bit today. I bought a couple shares of DNA today. I'm waiting for next week. Let's see how bad it gets next week. You're supposed to have a rally in October. That's how it's supposed to be. It's not happening, at least so far. So let's see what next week holds before we decide to jump in a little bit more into the market. I'm not buying, though, today. I did not buy the Tesla. Oh, we didn't get to talk about Tesla. Tesla, goodness gracious, $223, $222. I want Tesla lower than 222. Definitely I want it at 208. That would be nice. I think that was the last resistance for it. But, Tesla is going to be fun to buy if it drops that low. If it dare drops below 200, oh my goodness. I'm going to become a Tesla channel at the moment. Because that's when I want that. That's what 180 times 3. That's like in the 500s, right? 180. Then it's trading right now 25 times next year's earnings, which is ridiculous for a company growing as fast as it's growing. Absolutely insane. So it'll be fun to see. And Meta also has the lowest PE ratio of all time. That is also true, which is why Meta is also very exciting. It's just like there's a lot of deals right now in the market. We just don't know, or I just don't know where I personally want to allocate the most amount of capital to. I mean, if it gets stupid on Tesla might become a top 3 holding. I've always loved Tesla, by the way. I think everyone knows in the chat. I've always loved Tesla. I have a bad relationship with it because I bought it before the run-up. I sold it for a loss before the run-up like an idiot because I didn't understand investing in 2020. And so I've always felt like a sour relationship. That has nothing to do with Tesla. That has to do with my investing experience with it. But if I could get a chance to get back in at a good price, because I missed the June lows as well, I wouldn't forget that opportunity. Hey, Amit, miss seeing you in Money Talks. Hope all is well with you. Thank you for the kind words. Money Talks is still a great show. Hope you guys check it out. I am not a part of it anymore. I wouldn't touch Meta now. No runway ahead. Meta versus too many unknowns. So the last part of your thing is what I'm getting more clarity on. I don't think there's that many unknowns in the metaverse. I have watched videos of people learning how to play the piano on the AR headset. I've started to do more analysis about why Zucks bought it in 2014. I'm not saying the metaverse is going to be crazy. I don't think it needs to have 1 billion people using it. It just needs to have 10, 20, 30, 40, 50 million people using the product for it to have a really thriving developer ecosystem. I think the unknowns of the metaverse are there, but one of the knowns is that Meta is going to play a massive role in the metaverse. And they're spending the money to be able to justify that they're doing it. Now, does the public trust them? That's the issue, right? They have a horrible freaking relationship with the markets, but in terms of them having control over the metaverse, there's a big opportunity here. Okay, here we go. AMD and Tesla are the big news of the day. Investors should buy AMD and Tesla to ride out the volatile market. Let's see what this person has to say.
See you today. So you get the jobs report out today. You see the market reaction. How do you put this together in a any kind of cohesive strategy moving through October and toward the end of the year?
Well, I'm chuckling because the use of cohesive and Fed in the same sentence don't necessarily come to mind right off the bat. The way I look at this, the data, the Fed, they are as wrong about rates and labor as they were about transitory. So I look at a report like today and say, where can I buy that makes sense given a longer term time horizon? Chips are getting shellacked. I don't think the Fed's on target. So I'm going to go into the fight, not away from it.
Okay, what does that mean to you? How are you getting into the fray?
Well, for example, let's take AMD. Revenues are still up 29% year over year. Everybody's flipping out because they supposedly aren't going to meet guidance. Well, you know what? That's the sign of prudent management. They're adjusting ahead of time. 90% of the world's data has been created within the last few years. They are a key player in managing that, and that genie is never going back in the bottle. So I've got a longer time horizon. That's right on my radar.
So a couple of things he mentioned. AMD still growing revenues 29% year over year. Not going to meet guidance. I mean, he makes a very good point. It is not the worst thing in the world to not meet your guidance. In fact, if you are a stellar management, you tell the market before you come out with earnings, hey, we're not going to meet guidance. And you let the market know it's just not happening. And the market adjusts, and they might take down your stock a little bit, but then you recycle, and then you probably have a better chance of meeting expectations and guidance because you finally told them that you're not going to be able to make it for the higher expectations. Now, to be quite frankly honest, I've not done enough due diligence on AMD. I don't understand the thesis. I know there's people who've been invested since like 2017 when it was like $10, $5. And there is an overarching thesis there around chips and data centers and all this stuff. I don't have that thesis in conviction yet. But if they're growing at 30% year over year, reduced guidance probably isn't the worst reason to destroy the stock.
That's the kind of thing I like to buy when the markets gets carried out feet first.
Well, you can see how the stock is reacting today, down 12% as AMD pre-announced revenue and margins that were lower on weaker client segment revenue. This pre-announcement stuff is just, I guess it's take it on the chin early, don't wait for earnings.
I think that's one way to look at it, but I look at it this way. Companies figured out by accident last quarter that they can engage in the politicians' game, spin control. So they're coming out with preemptive announcements, trying to mitigate the damage ahead of time. And what they should be doing is saying, hey, look at all the other stuff that's actually still working for us, but they're missing that opportunity, in my humble opinion.
Let's talk about a couple of stocks that you do like right now. I think AMD, you have a somewhat contrarian view on that may do better than they thought, but Pepsi is another one you like.
Well, Pepsi and Tesla both. If you're not paying attention to stocks like this at times like these, I would submit that you really aren't in it for the investment. You're in it for the specialization or the Las Vegas style trade. These companies are both in high demand from consumers. They both got great numbers on the table, and all of everything else is a sideshow, Tyler.
Well, so what is it? A lot of people are down on Tesla. It's been down for a long time. What do you see is it trucks that is going to be a big thing for Tesla, you think? Or
well, it's much more than that. I mean, the only thing that poo-hooers have gotten right about Tesla for the last decade is they've continually underestimated Elon Musk. What the street doesn't like about him is the fact that he plays by his own rules. He's got the cash to do it, and he makes bold, sweeping moves at times when the market doesn't expect it. So I like a maverick. I like that idea. It's returned thousands of % over the last decade. He's into electrical trading, car production.
Do you like a maverick who arguably is overpaying for Twitter?
Yeah, I don't know that you can fairly say he's overpaying for Twitter because you don't know what his plans are any more than I do. So I agree with you. I think that's currently the question on my mind, but it doesn't bother me because I think he's going to reinvent that space, and he's got something in his mind that he hasn't yet made available to the public.
All right, well, we will see.
So I was listening to Chamath on the Olin podcast talk about the Twitter deal today, and he said Elon Musk isn't paying that much over. He's not paying 100% premium. He's paying more like a 25% premium. And so if we go to Twitter right now, Right now, the deal is in. So I don't know how much you guys have been following up on this, but basically, Elon's technically trying to delay the trial because there's a stipulation in the contract that if he doesn't have the debt and equity financing from his partners, then he can pay $1 billion and get out of the deal. So there's some time restrictions on when those banks can pull out of the deals, and that leaves Elon to be able to say, hey, in the contract, I said if I don't have the money, I can't buy it, so I'll give you $1 billion and I'll walk away. And then Twitter's trying to say, no. Even if you don't have the debt equity finance partners, you still have to pay the whole $33 billion, which is required for you to finance the deal. And so that's kind of the cat and mouse game that's going on right now with Twitter and Elon. I think the deal gets done, but it would be so funny. It was hilarious. I saw a tweet yesterday of what if Elon paid the $1 billion breakup fee, right? They got rid of it. And then Twitter stock tanks to like, I don't know, $15 and it's worth $16 billion. And Elon offers them $16.9 billion. And he ends up only paying $17 billion. Like that would be the most ideal scenario if he can tank the stock, pay the $1 billion breakup fee, get it to its real fair value, and then pay a small premium above it versus $44 billion. I mean, that would be a master plan. Now, the judge in the case is just not being friendly towards Elon. I think that's why Elon even offered to buy it, because his lawyers are telling him, hey, this judge is not messing with you. So we're going to see what ends up happening. But it would be interesting. Also, the edit button has that Keith Fitz guy seemed genuine. Yeah, he was pretty genuine as a contributor. The other thing is that Elon's the edit button just rolled out on Twitter. So a couple of different things to Twitter Blue subscribers. If you pay for the Twitter service, you've gotten the edit button. So more and more features coming out, and you never know if Elon could really make some good features that are worth paying for to open up different revenue streams. And I talked about that on the other stream the other day. Snowflake at 175, Duolingo falling. Where's Spotify? Kathy Wood has liquidated this stock. Spotify's at $87 after hours. Cool. Tesla's at 223, 222. Twitter at 49. So investors still are a little shaky on the Twitter deal. Not ready to give it the 54.20 yet, as they should be. We're going to have to see. But overall, that's where the market is. SoFi at $5 did not fall under 5 today, at least. We'll see. Elon isn't going to close. He'll just pay the breakup fee. That's what I think. I think Elon can get out of this, pay the $1 billion, get out of this, and then just get back into normal. And then buy them when their price goes down. My two favorite CEOs are overpaying my favorite CEOs are overpaid by 25%. It's great how pretty Twitter is being rolling out the upgrades after Elon takes over. Yeah, that is kind of funny. They're like, hey, now it's time for us to show you guys what we've been working on. Yeah, but other than that, it's a red market. Nothing fundamentally has changed. NEO is expanding in Germany, Netherlands, and Sweden. Where's NEO stock? Let me look at NEO right now. I haven't looked at NEO in a while. I used to have the stock at $3, sold it at $6 before it ran to 60. So I've got a bad taste in my mouth. NEO is a $23 billion market cap, $13. Price of sales of 3. Again, the China thing makes it like hard for me to even look at it. But I mean, there's a heavy NEO community I know that exists out there in the world. All right, let's look at this one. The U.S. economy is going to hit the brakes hard. Let's see what they have to say.
Review it is hot. Or parts of it are hot. Kyle with Hammond Capital Management, founder and chief executive officer. Good or bad news?
Well, I mean, when you have inflationary recessions, which is where we are, employment is the lagging indicator. It's the last thing to turn, and it normally turns 6 to 10 months in. And so I think we're all focused truly on the wrong indicator. It's a little hot, but the number of job openings dropped pretty materially in August, and I think that also happened in September. So I know the markets don't like this, and I know the Fed's going to keep hiking, but I think we're focused on the wrong indicator.
Okay. At this point, how many more basis points in your view, Kyle? I mean, given that maybe they're looking at lagging indicators and everything else, we just heard they've made zero headway getting to 2% inflation. So what are they going to need?
So look, my own view is you think about the balance sheet. The Fed's balance sheet pre-global financial crisis was $900 billion. The Fed's balance sheet post-crisis, pre-COVID, was 4.1 trillion.
That's a big stat. So before COVID, the Fed's balance sheet was 900 billion. After COVID, 4.1 trillion, which means I think this guy is going to say we got to get that to be tightened quantitatively.
That balance sheet during COVID went from 4.1 trillion to 8.8 trillion. They're just now beginning to pull almost 100 billion a month off that balance sheet. I think they're hoping to get $1 trillion off the balance sheet before they have to stop. I don't think they'll get $1 trillion off that balance sheet before they have to stop. So I still hold that we'll be seeing a pause in rate cuts a little more than a year from now.
So have to stop instead of being able to stop because they gently land us at lower inflation levels. What's going to cause them to stop? What kind of dislocation?
I mean, look, Europe's going to have an aggressive recession. Asia looks like it's in a recession. The dollar's strong, and the U.S. is already in a recession. We just keep hiking into, when you look at real GDP, we're already in a recession. I know the White House has tried to redefine the definition, but in reality, when you look at the CEO survey, that CEO survey is about as bad as it gets. You have 54% of CEOs believe that the recession won't be short, that it'll be longer than people think it is. And the overwhelming majority of CEOs believe that we're in a recession. And so I think it's important to note that what drove our inflation, Joe, wasn't necessarily only rates, right? It was the fact that we put 40% more money into the money supply in 18 months. And we're just now starting to make that money supply contract. And that's the real thing that the Fed needs to focus on. I don't think rates are what they should be focusing on. However, called the mechanism of the rates getting into the market, call it 9 to 12 months from now. Mortgages are over 7%. For a while, they were right at 3%. We've had a 400 basis point move in mortgage rates. You're going to see the economy hit the brakes hard when the numbers start coming out from the lags.
Shepard Smith here. Thanks for watching.
Yeah, the money supply is, hey, bro, I never used to know what the money supply was. Like, I didn't know it was a thing. I didn't even know we had a money supply. And then you go through a recession and you're like, oh yeah, we can't have 4 trillion to 8 trillion bucks and just expect things to be normal. It's like, no, that's not how the world works. Like, shit's going to hit the fan, bro. And so it's interesting. Quantitative tightening at 95 billion a month would mean we need 10 months, call it 11 months to take off $1 trillion bucks. Do we think the Fed, put it in the chat, do you think the Fed is going to allow us to get rid of $95 billion off the balance sheets for the next 10 months? I don't know, man. That it's especially if inflation declines the way Kathy thinks it's going to decline and we're going to get deflation, then, maybe we don't need to do all that craziness. But to get rid of $95 billion a month for the next 11 months straight, that means basically into 2024, that level of quantitative tightening is going to be a lot. Along with the fact that interest rates are going to be rising. I mean, interest rates rising to 4.4%. They want unemployment at 4.4%, and then they want to get rid of $95 billion a month. That's a lot, bro. It's like, that's what it makes me feel like I don't want to buy this stupid dip, because it's like, it's probably going to just keep dipping worse. Kelly is here. Oh, hi. I keep forgetting you do these market closes. Yes, I do. My first prediction of the year is going to be wrong, Gabe. I think they have to. The fact that the Fed has so many trillions is insanity. Yeah, man. It's like, low key, I kind of would give back my stimulus check now if I knew this shit was going to happen. It's like, well, you guys can have that 1,200. Just don't destroy the economy. I think that's the difference between when you're younger and you're older, bro. When you're younger, you're like, oh, 1,200 bucks. That's awesome. When you're older, you're like, who the fuck paid for that 1,200 bucks, bro? Tell me right now. Because if we just made it if this is some like magic where we just made 1,200 bucks, I know what's going to happen. It's going to bite me in the ass in a couple of months. That's what's going to happen. Unless you put it into the Bored Apes Yacht Club NFT and you made 50 extra money. Or Shiba Inu. But if you didn't do that, was the 1,200 really worth it? I mean, maybe. Some people definitely was. I mean, it helped me at the time. but man, did it fuck up this economy. Now, maybe, I don't know if it's all stimulus. There's probably other stuff that was there, but it's been rough for a lot of us. All right, let's look at this. PC weakness hitting semi stocks like AMD. Let's get some analysis on AMD. I don't like making predictions, but I think the downfall of Meta and Tesla has begun. So it's a very bold prediction.
The individual company thing first, and then we'll get to the question of export embargoes second. What are the individual company factors that are causing these firms, blue chip companies like NVIDIA, like AMD, to stumble so?
Thank you, Tyler. I think the semiconductor industry has this habit of making you feel amazing and awesome for 3 years and really awful in the fourth year. And I think we are in that fourth year. And what's causing the awfulness this year is a weaker consumer, rising rates, and as you mentioned, additional China restrictions. In the specific case of AMD, I think the weakness is really the PC market, which is kind of the hangover we had once we came out of COVID. PC sales, which used to be 260 million a year from an industry perspective, went to 340 million. And now we are trying to get back to what used to be pre-COVID levels. And I think that's what hurt Intel, that's what hurt a lot of memory companies, and now it's AMD's turn. So it's not really a new data point, it's just hurting different companies at different times. But on the positive side, what I will say is that their data center business is holding up very well. It's up over 40% this year. We think they continue to take share from Intel going into next year. And I think the valuation at mid-teens PE for one of the leading compute franchises, I think still remains very compelling. So we continue to like the stock, but we understand that consumer weakness could be an overhang in the near term.
So the PC issue was really demand getting pulled forward by the pandemic, right? Or am I wrong? Which I often am.
No, I think that's really it. I think there was a lot of demand pulled forward. And in the first half of the year, as the industry was starting to come out of the shortages, a lot of inventory was built up. And now many of the customers, given the weak macro conditions, are just unwilling to hold even the level of inventory they would have had in a normal consumer period, because those customers are looking at all the inflationary headwinds in the US. They are looking at all the turmoil in Europe, and they're looking at all the lockdown situation in China. So that customer confidence is not there. And whenever the customer confidence is not there, it just forces them to bleed more inventory than they would have in normal times. Like I said.
Okay, so some interesting thoughts on AMD, and some of the core businesses is kind of doing okay, but obviously there's some things that have hit that have caused it to hit some headwinds. We just got some new reports. I want to show you guys this. No one really talks about this, but I'm obsessed with this this website because I'm a nerd. So there's a website called SimilarWeb, okay? And they release the most accurate traffic rankings on the internet. And they just released the August results for every website on the internet in 2022. So we're going to put some websites in the chat that you would want me to check. YouTube's, now why is this important? If you're looking at the traffic a website is getting plus the application, you're seeing if it's slowing down, if it's going up, if there's more demand, less demand, why is it going down? Why, like you're seeing kind of what is the traffic momentum behind a company. YouTube got 2 billion less visits from July to August. 2 billion less visits. That's very interesting. 2 billion doesn't seem like a lot if you're looking at 35 versus 33, but 2 billion is a lot of ad dollars that are not going in. So that's YouTube. Okay, put in the chat which website you want me to check. Let's look at Google. Last month, I believe Google got 83 to 85 billion. Let's see where they're at this month. I would expect them to be lower if YouTube's lower. Are they lower? They are. Yep. Wow. Google went down 3 billion visits July to August. Wow. I did not expect that. Now, you could argue it was the summer, people were blah, blah, blah. I mean, you can make up arguments, but at the end of the day, if you lose 3 billion traffic hits, I'm not saying that's horrible. I'm just saying that's not the best, right? That can't be bad. Also, people should be doing it more because in the summer, they're looking like where to travel and stuff. Let's go to Amazon. I would expect Amazon. Wow, Amazon was down as well, 2.5 to 2.4. Okay, let's go to OnlyFans because Kelly mentioned OnlyFans. I would imagine this one went up. This one also was down. What happened in August, bro? 326 million to 311 million. Palantir's website also went down. I just checked it right before. Palantir went down about 30,000 visits in August, which is weird because they had earnings in August. You would imagine they had more traffic. 520 to 499. Let's do Audia. Let's do my platform. Let's do my startup. By the way, if you're not signed up, link in the description. Check it out. So we grew from 7.2K visits in June, 12.6 in July to 17.7 in August. I think in September, that's going to be a lot more because September was the month we really had some dope momentum. So we grew. So we're up, you know, we're not down like YouTube. But I would be okay with 33 billion versus 35 billion if I had a, you know, that wouldn't be the worst for me. Let's do Facebook. Let's do Facebook. What do we got on Facebook? Facebook is, I think it's down or it's up. Facebook's down. Wow, 19.4 to 18.2. And again, this helps us just understand a little bit, at least for these consumer content sharing websites, where the traffic is going. Netflix, let's look at Netflix. Netflix, I think, has to be down because it's the summer. People are on vacation. They're not watching as much Netflix. You would imagine, yeah, that's down 2.2 to 2.2. Some of you guys wanted to check out a website that has the word hub in it. We're going to check it out. Hopefully we don't get demonetized. This one also went down to, this did more than Netflix though. So people were watching something. What's another website that traffic determines the basis of its sales? Let's go to CNBC. Let's see how much CNBC did. TikTok. Yes, I got to do TikTok. CNBC went up. No, went down. Relatively small amount. Let's do wish.com for Jay Schwat just to get it over with. Wish.com traffic was down 24.3 to 24. Yeah, nothing too bad, but it's down. And then let's look at TikTok. TikTok, I'm assuming, went up. I think TikTok went up pretty decently. Is TikTok up? TikTok stayed stable. Wow, TikTok stayed stable June, July, August. They have a stranglehold on attention right now, even while the other apps are declining. Let's look at Instagram. See what IG is going. IG 6.2. IG, oh wow, 400 million less visits for Instagram. Q3 earnings going to be very interesting for Meta. It's also kind of why I'm scared to buy Meta before Q3, because if they have really bad decline in just DAUs, MAUs, that's not going to be great for the stock. And if we can get the stock at $100, that would be cooler than $130. Shopify went up 57.7 to 58 million. Is engagement really that important when one of the biggest reasons for the stock dying is QT? Well, in the context of Facebook Meta, yes, because to me, TikTok is just on the up and rise, along with Be Real and a bunch of the different other social apps. Audia going parabolic while the giants are falling. So yeah, if engagement goes down, even though QT is happening, the market doesn't care, like, because there's other apps that are going to steal that engagement. It's the tough business of being in a consumer-facing market, which I know intimately because of I'm making one of those. So it's tough to capture people's attention. It's not easy. Pinterest had 1 billion last month. Let's see where they are. Oh wow, they went down. 957 million. So Pinterest went. So I think August, maybe if every company went down, maybe it's not a unique thing about the company. Maybe August is a summer month and companies just go down in the summer. Do Cash App. Okay, let me do Cash App. Amid is literally the definition of trying to time the market. Look, man, if we know things are bad, then like, also I bought about $5,000 worth of stocks in the past 3 weeks. So I don't think I'm literally trying to time the market. Cash App is at 132. I don't know if this is the right Cash App website, because Cash App's part of Square. Yeah, I don't know if, here it is. CashAppGuide.com. Maybe that's it. Let me look at what Cash App is. But if we know it's going to go down, then, you know, we'll just keep waiting a little bit. Cash App. What's Cash App's website? Oh, it's cash.app. Okay, cash.app. Cash.app. Let's see. This is a big competitor to PayPal and Venmo for Square. 9.6 million. So Cash App went down as well. So August is usually a slower month for traffic. Yeah, it kind of makes sense. It's not a marketing. But YouTube going down by 2 billion. Sheesh. I mean, it's probably just an August thing. It can't be that crazy, but that's wild. All right, let's look at the market again. Let's see how bad. Let's look at this. Oh, by the way, the market's closed on Monday because there's some day for some Columbus dude or something. I don't even know what that's all about, but the market's gonna be red. Look, I don't really care who the holiday is for, bro. Open the market. Why do we have to close the market? Why is it so important? Like, if you're not gonna close the market on my birthday, why are you closing it on this Columbus dude? Like Ohio is not even that important. So I don't know why we're doing this. But alas, there won't be a market open then on Monday. Maybe I should just do a market open and just say hi if we're not doing that. It's Thanksgiving for us in Canada Monday. That'll be cool. Thanksgiving's gonna be fun. I'm so used to Thanksgiving being in November because of the States, but that'll be cool. Thanksgiving on a Monday. Bank of America 23, Amazon 114. Yeah, my mom was trying to buy Tesla at 240 the other day. She literally texted me, bro. I can show you guys the text. It's not gonna show up because the freaking camera sucks right now, or it's not my good camera. But she was like, she sent me this screenshot of Robinhood of her trying to buy Tesla at 248, and I literally was like, Mom, do not buy today. Everything is up. And she was like, it's still so low. I sold my Amazon and Google. I want to put it all in Tesla. I was like, not yet. And she's like, okay, boss. And finally, I'm proven right, because if she would have bought it, it would have tanked even more. And so, yeah, it's probably not the best. That's why I don't even want to buy Tesla right now either. I want to see if it gets a little bit lower. Would be interesting to see an average year search traffic for those sites. Yeah, it's somewhere in the trillions at that point. You know, if you have that much traffic coming in. Have you and Kelly teamed up for Aldea hoodies yet? It's hoodie season. Bro, the amount of shit I have on my plate, and then when I think about doing hoodies, it makes me remember that is the most ineffective thing I could be doing with my time. But I probably should get that done. I will get that done eventually. I just got to find the time to do it. I just got to find the time to get it done. All right. I think that's pretty much it, guys. It's I bought some SoFi. Yeah. Red market. We'll see what happens. Palantir Weekly live stream tonight, Friday, 11 p.m. on my channel. Be here. It'll be fun. We'll be talking about a lot of stuff going on in the macro. Sachin will be back with us this week. He has been here for like 5 weeks, so it'll be fun to have him back. And yeah, we'll keep it going from there. I might even just live stream the market open Monday and just talk about something even if the market's not open. Thank you, guys. I'll see you guys tonight. Oh, I have a video dropping literally about Tesla right after the stream ends. So if you guys want 10 more minutes of me talking about Tesla and someone else, then you'll see. SoFi Weekly on Monday. No, SoFi Weekly is going to be next Friday. Next Friday, we're going to start that. Is Chris going to be on? Yes, Chris will be on. Thanks, Mid. Have a great weekend. Martin, thanks for being here. I appreciate everyone being here. Love you guys so much. I will see you later tonight. Bye-bye.